Great. Well, thanks very much, Sarah. And yeah, no further ado, just really want to actually pose the question, or pose the issue here, that actually exploration shouldn't be just also for the mine, the new resource. You should be exploring for the mine closure, because one of the recognitions, I think, is the fact that mine closure is one of the biggest risks that a mine has, and what that legacy might be. So I'm going to sort of turn things on their head, really, and explain what I mean by that. How do we build closure into the exploration process? I just really wanted to give credit to a couple of projects that I'm involved in. One is BioPlus Mine, which was looking at an abandoned mine site in the Philippines. There's a website there you can go to and have a look at that. And then also an EU project that we're doing, and Sarah's involved in that, called Vector, which is actually looking at, how do we move mining in Europe? How do we make it much more? How do we find the deposit, but also make it more acceptable as a process? So I'm going to move us on. Well, mining project risks. Let's have a quick look at those. And actually, if you just have to look at the EY top risks for mining and metals 2024, and you'll see big and large there, ESG sitting right at the top. And we see there number 3, the license to operate. Obviously, capital is pretty important. But if we are looking at project risks, those two there, the license to operate and ESG, are writ large. And so we've got environment and we've got social in there, and we're going to unpick those a little bit. The major identified risk areas, some of which I'm not going to talk about. So there's the technical and financial risk, and obviously we see capital in there as number 2. People are worried about that. But I'm going to focus a bit more on the sort of the societal and ecological part of that. And that's definitely links into the closing of the mine. Because for any mining project, lots of people are very excited about the mine opening, but there are a heck of a lot of people who are interested in what that mine is going to look like when it closes. And that's a really big risk. And we know that actually the mining itself can suffer from technical failure. These give mining a bad name. These failures are not entirely a surprise, but they're often because perhaps the right information about the ore body or its wastes were not collected, and that the design of the mining operation and certainly its post-mining landscape weren't perfectly well designed. And obviously, if one of these facilities is going to fail during the lifetime of the mine, you better make pretty sure that when you walk away and close the mine, it isn't going to fail, during the legacy period of the mining. And we've got plenty of examples out there that, this is the reason when mining gets a bad name. It's the least favourable of any of the sectors, industrial sectors. If we did a survey in Europe, it's the least popular of those sectors. And that's because we see closures with no agreed plan, because they, in this case, this mine in Portugal was closed to avoid incoming mine closure legislation. And we know that legislation is going to change, and it's only going to get tighter as we go forward. And so actually we ought to be looking at ways of creating a gold standard so that we don't leave these, we're not left with a situation that when a mine closes, we leave a legacy like this behind. Because actually that environmental issue is linked into the social issues here, because this mine in Portugal, when it closed, it left an environmental disaster, and of course everybody lost their jobs. So that was like a double whammy. And then we have some really bad situations still, where mines still officially remain open, but they're abandoned and unreconstructed. And so there's still very few examples of fully certificated mines that have gone through that rehabilitation process and are transferred back to a third party, be it the government or whatever. And so those mines that lack closure certificates aren't actually closed. Huge. I've just picked South Africa here, but we know that there's a legacy of this worldwide. This is an old coal mining area in South Africa. This guy was a miner, and he lost his his job, and he's trying to make a living from a very degraded site. So the mine is shut, jobs are lost, social environmental issues. And as I said here, mining now has the lowest rating of all sectors by the public. We also have ethical failure, and this should be also part of the problem. It's one of the big risks. This is certainly avoidable. I don't need to mention this anymore, and I won't go into any detail. But that's also an enormous risk. Now, we heard that word trust, and of course, last year the conference was all about building trust. And actually, this is what mining projects should be doing. They should be building trust from the start, from that exploration, that first foot on the ground. Trust should start then. And so the social aspect is really ultra important. And it's more than social engagement. It's more than social acceptance, license to operate. Because there's emotion in there. And actually, you can't get around that. And there was a great paper by Segerson and Thisted in 2021 that said, without hope, potentiality, engagement, minerals will stay in the ground. So unless people are really wanting this to happen, the minerals will stay in the ground because you'll have people blocking it. And it's interesting that even PwC talk about trust being a critical material. So establishing trust with all equity owners from the start is essential. And so I think this is one of the biggest risks of failure that's out there. And we know plenty of occasions where trust is lost during the exploration stage. And that's because things have been done wrong. I won't get into the specifics of what was done wrong, but we've got an enormous lithium resource in Serbia that should actually be helping resource our green economy, and nothing's happening there because there are issues. There was a big breakdown of social issues there. Tambra Grande in Peru is another great example where nobody talked to the local farmers who just got deals to build new farms, and then a mining company comes along and wants their surface land. And that's because there's opaque permitting, no joint purpose from government and other agencies, imperfect practices. And of course, at the exploration stage, that can cloud a project from ever being started. So Portugal, which was looked upon as one of the best places to look for lithium, it's practically impossible to get anything off the ground. We know that there are different approaches can have different outcomes. So even in Cornwall, two people looking for minerals in different parts of Cornwall had different approaches. Again, I'm not going to comment on the details of it, but in one area, you had investors crowding in to become equity holders in an operation, in a project. And then we have another project which has got a similar intention where the residents are up against it. And clearly there are different approaches here, one of which worked and one of which didn't. And so what we need to build in these to reduce that risk is that need for shared ambition. I put those three diagrams up there that were nicely summarized by Purvis. We need to get the social, the environment, and the economic to get that sustainable intersection. And people have done it as pillars, but actually I like the embedded circles because we need to deliver all positively in all three elements and develop circularity in each of those areas. And this can only be crafted at the beginning. And so the new paradigm for mining has to be something where we have a process that's in self inherently regenerative, that's built inside that social, I call it a license. It's not the word that everybody likes, but a social where people accept that because they're going to benefit from it, and there'll be a long-term positive, sustainable legacy for people. And then that's all embraced within inside a circularity in the environmental concerns. And so I think this is where we need to be building. And we know that these things have to be led to be able to build things like a vision for the future. And we have some wonderful visions. We have something like the Eden Project, which is an old mining venture. But actually, in a way, that's what we'd like to have. So we've got informed co-creation of something that actually probably left a legacy that might even be better than the mining itself, dare I say. And so one of the ways forward in that is something that we've been trialing in this Philippines project, and a sort of a form of social exploration where you develop a system with the local people. And it's very difficult. So you have to use grounded theory methodology, which is really just data driven, where you collect the data and then you work out how you can go forward. There's no sort of imposed thing you can do. You have to work with those people. And so we can use this social economic technical solution to develop, put in there the geology, the idea of the post-mining landscape, what it might be, farming, food cache, and the infrastructures, and see how all of that can work together to get something that is socially acceptable. And this has to happen right at the beginning. And we need to marry that with good data collection so that we can manage the material flows, the stocks and the flows of the operation, both for the ores and the waste. We need to collect data about the ecosystem so that we understand that completely fully, so we can reconstruct that. And then we can move that on to where we can start to build these truly circular economies from a linear economy that brings in all of those understanding of the full materials and other parts of the natural capital, which includes the nature and the people, and establishing the true value of the mining to that particular region. And then make sure we do that in a transparent, accountable way and reduce that risk. So my mantra here is the trust bit, which we did last year. We know we've got to rebuild that trust and learn from our past failures. So be honest about those things. And then view raw materials and the circular economy as interconnected and dynamic. Measure that value in true terms. Improve how we mine, obviously, but embed stakeholders from the start rather than responding later when obligated to. So actually have this social exploration alongside your technical exploration. And industry needs to be proactive about what it's doing to change. And let's demonstrate the people that are doing it right, let's demonstrate that behavior and make sure it's transparent and accountable. So thank you very much. I think that's all of my slides. And so I will end my slideshow there and stop sharing.
There we go.
Thank you.
Thank you very much, Richard. Round of applause, everyone. Fantastic. Excellent. And Richard, yeah, thank you again, not only for using the little infographic or piece of art that we put together for this conference. So gold star for you, fantastic. But also as well, citing the chapter in a book that we managed to put together over the last year, which is exciting. We'll put a link to that into the chat as well. Now we've got a question that's come in from Michael in the chat, and Michael asks, where does governance fit into the pillars or embedded circles to contribute to sustainability and building trust? What do you reckon?
Yeah, that's a good point. I mean, part of this is that you hope that the governance will be built in there, that the industry would be able to regulate itself. But if you start building it with the people themselves, I think you build that governance structure, and rather than imposing governance, you sort of have to build something where everybody is an equity holder in it. So you can have people that might adjudicate on it. So people like the ICMM for the large, big industry might be that the way you do that. But I think the governance of a project on a scale of one in Cornwall or one in Tanzania would be, let's do something that's fit for purpose governance in that region, obviously guided by best practice around the place. But actually, because I think the biggest barrier, the biggest risk is this social aspect. And it's also the thing that delays things so much. I think part of the reason mines take 17 years plus to get in is because we do the governance in a sort of an imposed way. Whereas actually, if you've done all that work at the beginning yourself, you've got all the people who might be the critics involved in it. The governance is done internally all along the way. I don't know if that helps as a view, but that's certainly what I would see.
Great, thank you for that, Richard. There's a question that actually has already been answered by one of our previous speakers that was posed in the Q&A, and this is from Andy. And Andy was asking, is there a business model that spreads technology risk, but I'm going to expand that to other forms of risk across numerous small mines or small assets? What do you reckon, Richard? Do you think if you get lots of small assets and then you think, well, hang on a second, if we manage these as a interconnected whole or a consortium or something, can you share some of the risk or the controls for those risks? What do you think?
Yeah, I mean, I think we probably have to go to agriculture. I mean, I always think mining is a bit like agriculture, and in a way, we've got that great saying, haven't we? If you don't mine it, you got to grow it. So I think those are the two things that society do. So it's a bit like, how do you get together cooperatives on small production of vegetables or whatever. So I think you develop some kind of marketing strategy where that might get sold, local markets. I think we heard a really good talk there from the previous talk, Casey there, that where you could get some people to collectivize activity. And so I think you do have to build sort of cooperatives to do that, to help, because you're right. But then there's an opportunity to share technologies, to share equipment even, because farmers do it all the time. They have these big consortia that own maybe tractors, because you only use a tractor or a combine at one time of the year. So why not share it with other people? And so I think maybe moving towards those kind of things might be good.
Yeah, absolutely. I mean, there are lots of precedents that are set for this. So as a very personal example, my mum and dad, who farm in the northeast of Scotland, they're thinking about moving to a different form of sowing the seed. But that's really expensive. And one of the blockers is actually having access to the equipment, not for us to go and buy the equipment, but actually any contractor in the region having access to that equipment. So I think perhaps there's lots we can learn there. One final question before we move on to our next lovely speaker, and that question comes from Jim, Richard, and Jim's asking, have you found the reduction of cost of the environmental bonds to the mining after the closure is being used? And is there actually money being provided for that particular bonding or those funds, or are the mining companies simply taking the cost off their books and moving on? What do you reckon?
Yeah, that's a really interesting question, Jim. And I think the problem is, again, because these are imposed things. So legislators are talking about these bonds. Actually, so what we're saying is, yes, there should be kind of a credit for collecting all this data up the front end. And it's almost like we need to value and I didn't show the slide there, of a value of a project. So you can look at the stock market, use the Lassonde curve as to a value of a project through its life cycle. And you realize the exploration side of it's not got much value till you find something and start mining. You earn your big money in the downscale cost, and you wonder whether you could borrow from that end to fund the work that needs to be done at the front end, that will mitigate the problem at the end. Somehow you need to sort of be able to pay forward. So I've always thought that it's when you're in your own career, you get your money when you're too old. I always wanted a sports car when I was young. I can only afford it now. I can't see to drive the thing properly. So I think maybe we need to bring that sort of stuff into the mining. Look, there's an expectation you've got to earn money down let's put the money at the front to make sure that the end game, you can close the door at the end of the mining and walk away because you've done such a good job of building that post-mining landscape and so on.
Yeah, and I think that triggers another thought in my mind, and don't worry, we will move on to Ellie in a second, I promise. And that again is taking that proxy from the world of farming. So this need to change the way in which we farm to move to a more regenerative approach, and we can draw lots of similarities or learnings between, I think, farming and mining. And this is something where we're in the middle of a project right now where we pulled together the entire supply chain. And so what this is doing is saying, well, hang on a second, the people who actually distill our barley into whiskey, so the whiskey distillery, they obviously have a vested interest in making sure that the input materials or the ingredients that go into their whiskey are grown in the most sustainable way possible. And that's something where, of course, from a farming perspective, you want a higher price for your barley. But there are other things in there as well, such as actually maybe the distillers can input funding into that consortium of people buying equipment so that the farmers have a lower barrier to entry in terms of changing the way that they do things. So this
No,
is something, do you think there's a similarity there into mining?
I do. Well, let's take the Eden project for a case in point. You know, that was not funded by the mining company, and you know, it's generated 2.7 billion for the local economy. It took a different vision for that end of mine life, and so I think it involves more than miners, because those, I think you need to get all of those players in there, and so therefore perhaps the value of that thing like the Eden project was bigger than the mine itself. So actually, if we can start thinking about that full life cycle and the end game, it's a bit like your whiskey. If you can then end up producing whiskey that can sell for £1,000 a bottle, you know, as a miner, you're just thinking, or a farmer, you're thinking about barley. But actually, you've got to think of the real end game, and you know, if you can do things in a better way that will give you something at the end that will be a prize that you don't think about because it's outside your own scope. So I don't think the China clay miners had any thought about building a biome, you know. So
exactly. So this is about having the vision into the future and then thinking, well, hang on a second, how can we leverage that in terms of that long-term value rather than that short-term gain that we might get? Brilliant. Thank you very much, Richard. As always, round of applause, everybody, for Richard Herrington.
Thank you.
Awesome.